Hello, my name is Harry Moore, and I'd like to talk to you today about how you can get your business ready for investment, how you can find the right kind of investor, and if you're selling your business, how you can get the best value for it. So, without further ado, let's get on with the business.
Ready? Well, the definition that I use is that it's preparing the business and the way it is structured sufficient to attract the interest of potential investors. And what I mean by that is that we're putting the business in a position so that it can really utilize any injection of cash that comes into the company that will maximize the benefits and ensure that the financial and the strategic objectives are really met. And really the underlying message is that without this investment, these objectives would not be met. You will be asked by investors, what will happen if you don't raise the necessary money? And the wrong answer is to say that we would do it anyway. The right answer is to say that we could not do it without the right level of investment. So, what are the reasons for looking for investment? Two reasons really in my books. Is looking for investment for growth or recovery of the business, recovery performance, or it could be that we're now looking to sell the business and come out of it. Um, if we're looking to invest for growth or recovery, a variety of reasons, and these are just some of them. You may be looking to grow, to expand. It may be that you're looking to invest in new plant and machine, new equipment, new software even, or new markets, new staff, new people, etc. There are certain strategic objectives that you want to meet, and you cannot do that without new cash. You may be looking to make acquisitions. You may be on a buy and build strategy. Or it could be that you simply want to recover performance, either coming out of COVID, or maybe there may be other reasons why performance has deteriorated. Another reason is that there may be an option to carry out a management buyout, that the principals want to move on, and that management have an interest in buying the business or buying a stake in the business, providing they can raise the necessary amount of cash. So we're looking to exit or sell the business. Again, it could be that the principals want to retire. They want to realise some value out of the business after all the hard work, sweat, blood and tears they put into it. I want to do something else. Go and paint pictures on a Greek island, play golf 7 days a week, whatever. Or it could be that you simply planned an exit from the beginning. You started the business to raise some money so you can then achieve your lifestyle objectives. Again, it may be that the business is struggling and it needs new ownership. And I've been involved with one or two cases where that has happened, where the business needs to be with a partner to increase its critical mass. Another underlying reason, and quite a strong one, is because the current investors now want to come out of that particular investment. It is either not working, or they've changed their portfolio, or they simply want to move on. So they're some of the reasons. So what kind of investment is best? Well, there is no real answer to that. It depends on the business, and it depends on what the principles of the business want to achieve. Debt is the obvious one. There are a wide range of sources for that. But of course, if you take on debt, you have to service it. Equity is where the investor will take a stake in the business, buy shares, acquire shares in the business, which could be 100%. But in my experience, if it's an institutional investor, then it's usually up to about 40%, with management keeping the rest. But it can vary. Mezzanine finance is really, in simple terms, a combination of the two, where we actually will take on debt, and that at some point can be converted into equity if the person, people taking on the debt, cannot pay the debt back, or simply there's an arrangement that it will be converted into equity at some point in the future. So they're the main kinds of investments that are around. So where do we get it from? Why do we get the investment from? A number of sources. Equity, private equity firms, venture capitalists, family offices. They're what I call institutional investors. They may be managing funds on behalf of third parties. They may have funds themselves. Their funds may be coming from pension schemes, etc. So they're institutional investors. There are private investors, individuals who want to either buy a business or put money into a business to get a return on that. and we'll see often private investors belonging to what I call business angel networks. These are networks which you can access quite often online, where you put your business case to a particular network, and the managers of the network will then put that proposal out to some of into their network, and individual investors will either take an interest in it or not. Crowdfunding is probably not as popular as it used to be. It peaked a few years ago, and this is where you have a proposal. Typically, it's a startup or a new product development. You put that out into a network, and various people express an interest in it, and you collect money on a collective basis from different investors who will take 1%, 5%, 10% stake in the business. Throughout Europe, there are many regional state schemes to support companies, and some of these will involve equity. And certainly in the UK, there are quite a number that I personally accessed. I know there are some in Germany as well. And of course, there's always family and friends who may take an interest in your business. On the debt side, very similar to equity. So a lot of the equity guys will also be looking to supply debt. Product firms, banks, of course, overdrafts, loans. And then there are asset-based lenders. So if you have assets in the company, such as plant and machinery, you can borrow against that. And also your debtor book, the money that you are owed, your receivables, you can borrow against that. It's referred to as asset, as invoice discounting. So you can draw down money upon your invoices to help you to grow your business. And that is quite useful in high growth scenarios. And again, private investors, family and friends, and there are quite a number of regional schemes that offer loans. So, getting investment ready. What are the key requirements? 3 major important things: management, management, and management. And the reason for saying this is because investors, particularly institutional investors, back management, back people, not businesses. They're primarily interested in the management and can they deliver, providing, of course, there's a good business underlying that. Trying to get an investor into a business without a strong management team does not work. It will not happen. So, having said that, what is the right management team? Well, first of all, there's got to be strong and robust leadership with a very strong and good sense of strategic direction. Somebody who understands the marketplace. Somebody who perhaps has done it before. That is always quite useful. If the leader of the business has actually worked with a private equity firm before and has actually delivered, then that is a major plus. Other reasons are good understanding of the marketplace, solid financial control. That is really important. That we're controlling the cash and we know where the money's going, and we're also managing the future in terms of our financial forecasting. And also, some investors like management to make a commitment either through a co-investment or a salary sacrifice. A co-investment might only be a small amount of money. It might be 10,000 euros, 20,000 euros, compared to 2 million euros that an investor might be putting in. But it's this element of sacrifice and commitment, with investors saying, why should I take all the risk? Or do management not believe in this company sufficiently that they will also take some risk? So, but what happens if the management team is not quite right? And that does happen, but it's as long as the leadership is there, the leadership is absolutely essential. If there's no leader, then it's going to be very, very difficult, unless it is a management buy-in. So leadership is absolutely key, strong leadership. But if there are gaps in the teams, so for example, we may not have a finance director, we might have a financial controller or a management accountant, but we need somebody more senior. There might be a gap somewhere in marketing or in operations somewhere. In my experience, the best thing is to recognize that and declare it and say, yeah, we've got a good sense of direction, we've got a good team, but there is a gap here. Because you will find that quite often with institutional investors, they will have people they know who are MBI candidates, might be interims, might be full-time directors or non-executive directors. They'll quite often know people and have people that they would like in the business. And quite often they themselves may want to have a role on the board as well. So the management team is not right, then let's recognise it. So getting the business investment ready, what shape is it in? Information is key. Quite often I get involved in companies looking where there is a sale or an investment and the information is just not there. It is absolutely key that we have good information, that it is readily available, good financial records, realistic forecasts. I mean realistic, not a hockey stick approach that we've done very little for the past 5 years, but all of a sudden, hey ho, we're going to go into high growth. And good market data. We know the market, and these are not just assumptions. We've got realistic market data because we've done the research. Knowledge. This is the intelligence in the business, a good understanding of the market again, but have we got intellectual property? Is there value in the brand? Is there value in the products, the services that we have? Do we differentiate from the people? What knowledge do we have in the business? And do we have knowledgeable staff? Do the staff know what they're doing? Are they experienced? Are they recognized as being experienced in the marketplace? Structure. Is there an organisation chart available? Do we know what roles are? Sometimes I go into business and I will ask a managing director or a CEO, say, how many people do you employ? I'm not quite sure. What are the roles? Well, again, not quite sure because there are no job descriptions. I think clearly defined roles and responsibilities are key. So there is a structure, there is a structure that is effective. We know who does what. And most importantly, there is a team that are working together. Success. That the business has a track record, that it can demonstrate this. There are some success stories, and the reasons why the company has been successful, and equally importantly, why it will be successful in the future. So, what shape is it in? Presenting the business to investors. So this picture shows a meeting, which is very nice. No social distancing here, but hopefully we'll get back to this. But regardless of that, meetings on Zoom and Teams are still happening. The stages really are, first of all, to get a teaser out, to get some information out to potential investors. The teaser is really just a few words, half a page, describing the business, what you're looking for, to generate a little bit of interest. It's a truthful document, outlining a bit of the history, some projections, some numbers, but doesn't give a lot away. It's sufficient for a potential investor to say yes or no, I'm interested in it, without them spending too much time on looking at the detail. Once they've said yes, that's interesting, I'll go to the next stage. We then have the information memorandum, which, if we're looking for growth, should contain the business plan or an outline of the business plan. So the information memorandum is important. We have in NMS some templates that I'm happy to send to you. If you want to give your email address after this session to Lilia or Sophia, we'll get that sent out to you, etc. So the information memorandum will talk about the history of the company, what it does, what it wants to do, what is going to be different in the future, and a substantiation of why we can achieve our strategic objectives and how it is going to be done. And my advice on any projections is be conservative. It is always better to overachieve than underachieve. Be realistic, because you will be challenged very thoroughly on any projections, I can tell you that. The meeting is really important, because this is when, it's people to people, eyeball to eyeball, when the investors can see the whites of your eyes and will be thinking, yeah, I can get on with these people, I can back these people, they're making sense. And that is really important. So the meeting is key, that it's presented in a professional way, and that you have information readily available, and we're showing some enthusiasm for the future. But again, pragmatism, being realistic, being conservative, are the key messages when we're meeting people. And it is not just one meeting. The more meetings, the more discussions, the better. In terms of information, you will find that investors ask different questions. Even though you prepare everything, every investor, in my experience, asks different questions. So don't be surprised if you get some questions that you didn't expect. That will happen. That's not a failure on your part. You present as much as you can. Okay, selling the business, so the rules apply really with the teaser, information memorandum, etc. I guess the important thing is who's going to buy it. When we're selling a business, we don't know. And there are different kinds of buyers. what are called strategic buyers, and these could be trade buyers, somebody in the same business as yourself, could be a competitor, could be somebody in the supply chain, it could be a company that's looking to grow in your sector, but doesn't make your products. So there's a wide range of companies that could be interested. Other than MBI candidates, individuals that want to buy into a business, either 100% or take a stake in the business, and they'll have the backing of various candidates, so various investors. How do we find them? That is a key thing. Well, you can do it through brokers. I can do it through people like ourselves, through NMS. We can help you with that. How much will I get for it? Sometimes if you talk to business brokers, they will value your business on the high side. Be really, really careful about business valuations, because the value of the business is only what people will pay for it at the end of the day. So there are various formulae for calculating the value of a business, whether it's based on a profit earnings ratio, assets, etc., market penetration. There's lots of ways of doing it. But at the end of the day, it depends upon what people want to pay for it. So be fairly flexible on that. It may well be that buyers will be considering what is called a deferred consideration. That is, I will buy the business, but I don't want to pay for it now. I'll pay for it later, on the assumption that certain targets and objectives have been met, financial targets have been met. Or it could be an earnout whereby it's actually paid out of increased profits. Be careful of this, because sometimes you might be in a risk of actually company buying itself on behalf of an investor. So deferred considerations and earnouts are one way of doing it, apart from a straight sale. Okay, so why is it important being investment ready? Well, the overlying message is that being investment ready, it really demonstrates that you are both serious and professional in what you're doing. It is about the business, and it's about the way it is presented. Quite often, people looking for investment will be more concerned about how they present themselves. You've got to get the business investment ready as well. And if you do that, you've got a better chance of getting the right kind of investor. You can get the wrong investor who's probably made a mistake. So it is important to get the right kind of investor who can work with the company, work with management, and get the right level of investment. And sometimes it's better to aim a little higher in terms of investment into the business rather than too low. So if the cash flow says I need €1 million, then think about 1.5, and I think you'll find that investors will buy into that. And again, it's better to get the right investment. So that is it from me. Thank you very much for listening, assuming you are still there. And if you've got any questions, then please send them through to Lilia, and I'll take them. Any questions, Lilia? I can't hear.
Great. Thank you so much, Harry, for a very insightful presentation. Before we go to Q&A, I would like to mention again, if you have more, you want to find out more about us, please visit nmsconsulting.com. And I see some questions. And I want to ask the first one. Just a second. How do I go about finding investor?
Yes, I referred to that briefly, and I think I said you come to NMS, but in fairness, there are other people. You can talk to your existing advisors, your accountants, your lawyers. They quite often know people. You kind of go to Google, go on and look for them online. That is time consuming at the very, very least. In my experience, you either do it yourself, which is time consuming, or you would go through an agency. Just be careful about business brokers. You go to. It's usually easier to go to a firm of advisors like ourselves to assist you with that.
Mm-hmm.
Yeah.
Thank you. I have several more. How much equity should I expect to give away?
It's an interesting question, this, and in the UK there's a TV program called Dragon's Den, and quite often people come on usually with new products, new ideas, and ask for £200,000 for 5% equity, and people sort of say, well, this is not going to happen. You've got to be realistic. People don't like to give away equity, don't like to give away shares, but want an injection, significant injection of cash. You've got to be prepared to give away a reasonable amount of equity. In my book, you could be talking up to about 40% if you're staying in the business. It could be high, but if you're up to 40%, be prepared to do that. It depends on the state of the business. If the business is quite distressed, then it may be that whoever invests may want to take control, but usually up to 40%. Certainly more than 25%, 25 to 40%.
Yeah, I see. And then another question which follows this one. Can I get people to invest without giving away shares?
It's unlikely unless it is debt. You might get people put it in the form of debt, or you may have another form of shareholding with non-voting rights, so they can vote. They can get take equity. They've got no voting rights, but they will get rewarded when the company is sold or when it achieves certain objectives, financial objectives, and they get paid out in dividends. So the answer to that, I guess, is yes, you can.
Yeah. Another question, how long does it take normally to find an investor or sell a business?
If you're selling a business, it can be anything up to 9 months, 6 to 9 months. It depends. If you're looking for investment in an existing business, it's usually less than that, but it could take 3 months. If it's an institutional investment, they can take 3 months. They've got to go through due diligence, their own processes, through credit committees, etc., and that can take time. Sometimes these committees only sit once a month, so I expect about 3 months. It's not going to be overnight. Sometimes if the company is distressed, it can happen quite quickly. It can happen within weeks. So it very much depends on your situation, but it could be up to 9 months if it's selling a business.
Mm-hmm. Thank you, Harry. And the last question is, can I find an investor myself?
Yes, you can. As I said earlier, you can do it. It is time consuming. I've done it, etc. Through NMS, found an investor for the last company. I spent a lot of time, but I had to contact 77 private equity firms, trade buyers, and it takes a long time. If you go to a third party, you might find that they already have a number of people on their books who are looking for investment. The other thing I think about finding investors is once it is known that you are selling or looking for investment, you don't know who's going to turn up, really, and not be interested. Okay.
Thank you so much, Harry. And I want to thank everybody who have joined to the webinar today. We will host next webinar next month, so keep eye on it. And I wish you a wonderful Christmas time and hope to see you soon. Thank you.
Thank you. Bye.
Bye-bye.